Hi, everybody. I'm back again on VCTV, and today I'm going to discuss about investments in startups from developing countries, like emerging markets, basically. So, yeah, excited to be here with the panel of speakers. Why are we discussing this? This is very important. I just want to give a little bit of perspective why we're discussing this. So, the result of economic restructuring and the diminishing appeal of developed countries to institutional investors like VCs has been a significant increase in VC investment in developing countries since I think beginning of 1990s, right? More specifically to Asia, there has been a significant increase in new venture capital funds flowing to Asia as compared to Central and Eastern Europe. So the movement of venture capital from developed to developing countries is not without inherent risks. So let's just discuss what's going on in developed nations in terms of VC money, what kind of challenges are they facing, what is the upside, so on and so forth. So, oh, okay. Oh, I see the speakers. Okay, I thought I was talking to myself, but so we got a full house. welcome all. Welcome Dr. Moraine, Karthik, and Gary. Thanks for joining me today. So yeah, let's have a quick round of introduction of each of you before we start this topic. Dr. Moraine.
Hello to everybody. I'm Singapore-based, so in the middle of Southeast Asia. The little red dot in Southeast Asia. I myself, I'm running our family office, venture engine and venture capital arm since 4 years. Before that, I've been in electronics manufacturing. I'm also an entrepreneur myself, founded a couple of companies, and I'm sitting on several advisory boards as well as governance boards of small startups as well as MNCs. So I'm really happy to be here and share what we have experienced and learned in Southeast Asia the last couple of years.
Wow, welcome. First of all, welcome, Dr. Moraine. And we would love to know what's going on in Southeast Asia in terms of the investment landscape. And yeah, thank you so much for being a part of the show. Karthik.
Thank you so much for hosting me this afternoon, Sunny. Karthik Bhatt from Middle East, Dubai. Retailer by profession and manage a couple of family offices based out of UK and Northern Europe. Also on a panel of venture funds based out of Saudi and Qatar, heavily invested in edutech, space tech, a lot in fintech and a little bit in health tech. Always scouting out for deals which allow democratization of any annuity at the bottom of the pyramid. That's the aim. Thank you for hosting me once again. Pleasure.
Excellent. Thank you, Karthik, and welcome back again on the show. Gary, morning. How are you?
I'm great. I just had a 10-mile bike ride. I had to go really, really fast to get back here in time. So I was going the fast. I think I had a record actually.
Oh gosh.
Yeah. So anyhow, my name's Gary Fowler. Great to see some familiar faces and friends today. I'm a serial entrepreneur investor, deeply involved in artificial intelligence, quantum computing, cybersecurity, and now crypto. Building a new project called Tempest. I've done 17 companies, been involved in 2 unicorns. I was on the original management team at Click Software, sold to Salesforce for $1.35 billion, and also Eva.ai, an AI HR tech company. I own, something, I don't know how many companies, maybe 30, something. I got holdings in 30 companies or so, maybe more. And I founded a remote patient monitoring company with a graduate of Stanford University that's taken off. It's called Zemply. Just a lot, actually. And GSD Venture Studios is what I'm working on today because we believe, as we talked about earlier, that intellectual capacity is evenly spread, but opportunities aren't. I've been working in tech for 37 years, so out of Silicon Valley, so you can imagine who you know after 37 years. It's kind of funny. You're talking to somebody, on your phone, and they're on the news. But that's the way the world really works. So we have a venture studio that has an accelerator. We curate companies every 2 to 3 months, anywhere from 10 to 20 companies from around the world. We believe that that in order to be able to help our planet get better and to be able to make our lives better, we need to use the intellectual capacity. That's it. Thank you.
Intellectual capacity. Thank you so much, Gary. And thanks for being on the show despite your, whatever.
You gave me a goal. I just checked my oxygen levels are at 99 right now. I've never had 100, but I'm right up the top.
While Dr. Marin and Karthik were waiting, I just told them I'm chasing Gary. So that explains.
Well, I was coming. I was on my way.
Great. All right, we're done with the introduction. Obviously, this is about venture money into emerging markets, developing countries. So what are the trends do we see in terms of venture investments? We can start with the countries that you all invest into or you have invested into recently. Just let's start with the trends that we see. Can I start with Karthik?
Sure. So the investment patterns, if you see, and the trends that you see in developing countries are significantly different from the trends and matter patterns you see in the evolved geographies. If you were to do a little bit of a comparison, evolved geographies would see a lot of investments in mature technology, innovation, in terms of being the first or pioneerizing something. While developing countries, the investments specifically begin just about 15-20 years ago. So it's pretty nascent. The startup ecosystem itself is very nascent. India being an exception, considering the kind of multipliers that it has seen. But otherwise, when you get into a developing geography, you encounter a lot of challenges. Your financial regulations, banking regulations, statutory compliances is a challenge, which means routing of dollars for a global VC to invest into a startup in a geography or a developing geography is a challenge. It's a first challenge. But a plus point that comes across is the quantum of ideas and the quantum of opportunities that you see in a developing geography is something that you'd never see in an evolved geography. Common day problems and solutions to the common day problems, quality of talent, quality of innovation, quality of effort that goes into it is very different. You sometimes struggle to find the right manpower and right infrastructure to build because you don't have ready-made incubators, neither do you have ready-made startup ecosystems built in. So it's a mixed bag. Success rates historically used to be 1:14, 1:16. They have now improved to a 1:9, 1:10 in certain geographies. Technology used to be a key player in the past. It's along with technology now. It's also a lot in the health space, a lot in the food space, a lot in the e-commerce space, more in terms of convergence space that we see coming in. But startup ecosystem in developing geography is something that has a longer gestation period. You need to stay invested in the geography as a VC or as an investor and handhold few companies before you start really understanding how the geography and the market works. So it's about entering a new business, staying there, giving one generation or two generations of investments, losing some dollars before you get your foothold. That's how we operate in Middle East and we operate in subcontinent.
Interesting. Thank you for sharing those opening trends, Karthik. Dr. Marin, over to you because you invest in Southeast Asia and I know you invest in Indonesia.
Yes, we do. You asked for the trends. The trend we see in the venture capital landscape is there is more pull for growth capital and expertise to assist. There are a lot of very successful startups that have raised money the last couple of years with a well-diversified set of VCs and family offices, big and small. They grew well, and now it's about growth capital. So that's about pre-IPO plays, more or less. So that's the trend we see. If not Southeast Asia. Southeast Asia is a pretty big conglomerate, I would say. And if I talk to my German friends, sometimes they just imagine, oh, that's like the US, pretty much one country, more or less the same market drivers and so forth, but it's not. What we've learned is that each market has own market dynamics. What is really interesting for venture capital, if you look into Southeast Asia, it's the mix of all the ingredients. It's like cooking, you need a lot of good ingredients and then you learn how to combine them. and cook a good soup out of it. So it's certainly because there are problems that need to be solved. Might be small problems, might be big problems for your everyday life. If you look into Indonesia, uh, most Indonesians, they do not have a bank account, even more do not have a credit card, a lot do not have health insurance. So it's creating struggles and problems in day-to-day life. So there are a lot of startups who are tackling these. Obviously, for more developed countries, small issues because we don't even think about it, And then it's all the ecosystems. Secondly, and
Yeah.
much more.
Yes. I think very rightly stated there, Dr. Marin, in terms of Indonesia as an example. For sure in the developing countries. I'd like to know from Gary's perspective, because Gary is like, he has invested everywhere, including Africa, India. So Gary, you can share the trends and what kind of differences do you see Silicon Valley, US opposed to the rest of the world?
Well, because of this digital transformation the last couple of years, things have dramatically shifted. We weren't on StreamYard or Zoom we did, but we didn't need it. We used it as a luxury. Now things have changed and it's really democratized the opportunity around the world. And at the same time, we work a lot in Nigeria, a lot. And we see quite a few AI companies. They have on Saturdays, they have their entrepreneurs club called AI Saturdays in Lagos. There's some companies like Flutterwave that are $1 billion valuation, Patricia, which is $500 million today. There are untapped opportunities, and that's, a number of years ago, 20 years ago, I went to Russia. And people were saying, "Oh, why would you go to Russia?" Et cetera. But I started the first accelerator there, and there are a lot of great scientists, a lot of great academics, and that are really on the cutting edge. And so here was an opportunity. Who would have thought? Ukraine, Belarus, Russia, other places in Eastern Europe, in the Eastern Europe orbit outside of Russia, and there's incredible opportunities. And remember, what was it that Warren Buffett says? Go in the opposite direction of the market because that's where you're going to make money. And the situation is, it's not easy, but those are where the opportunities are. So what am I seeing? If you look at Silicon Valley is really a conglomerate of people from all over the world, right? They're from India, they're from Pakistan, they're from Singapore, they're from all over. So if you want to meet Bosch, they have their office in close to Palo Alto. If you want to meet Docomo from Japan, the largest telecommunications company in Japan, they're there. The CEO of Innovations, Takashi Suzuki, is there. So what we need to do as a planet is figure out the population is going to go from 8 billion to 13 billion this century. Average temperatures across the world could be up 8.6 degrees. By 2050, we're going to have to double the food supply to feed the people on the planet. This is a challenge we all have together to be able to solve these incredible opportunities, right? The incredible challenges in front of us. We need to use all the brain power, and we got to help. People need to be able to help themselves. So when you create a company anywhere on the planet, in rural America, you create a company that can help people feed their families. It makes the world a little bit better place. So what we see is, as we reach out, and we've got people from 15 different countries in our accelerator right now, we see hope, dreams come true, an opportunity for them to be able to take their project or product to the rest of the world. Because these are people, 9 out of 10 startups fail. Why do they fail? They fail because many times they don't have the contacts and connections. Many times they're not technologists. They're really, or they're not entrepreneurs, they're technologists, and they don't know how to get it out. They don't know how to market it. So what we need to do is we need to help them. We need to turbocharge it. We need to help them take a 360-degree view, and we really need to democratize this everywhere.
Right. So what I gather that there are not only challenges, but there are opportunities as well in these emerging markets. So what is that strategic role a VC can play in a country in a developing country. Karthik?
So, VC necessarily plays a role of an economic stimuli in a developing country. Not only an economic stimuli, a 360-degree thoroughbred incubator in terms of trying to source deals or trying to create and cultivate business opportunities. Because with developing nations, the GDP is poised in such a manner that consumption more often than not outstrips the supplies. So there's always going to be a gap. A VC necessarily needs to build and tap that opportunity, identify the right gaps, create a market for those gaps, because the market would not be existing. A startup would not necessarily come with a market or would not have a plan for a consumption platform. It would only come with a stagnant integration. No value integration would happen. And hence, apart from instead of just investing the dollars and making the dollar accessible, a VC becomes an incubator or the threshold of building a venture or a startup ecosystem, curating ideas, creating business opportunities, seeing them through, investing into them, creating a market for them, creating opportunities beyond that, and then merging or creating value or vertical integration, as we call in the business. And hence, it becomes a stepping stone for the industry. It accelerates the GDP. It's what we call as a catalyst in a financial services business. A VC or any family offices that comes in with dollars in the market necessarily acts as a catalyst. And I've seen that happen in 2003-4 in India in the e-commerce one boom, 2007-8 to 10 in Middle East and in India in the e-commerce two boom, and now I see that in the 2020-21 post-pandemic era in the Middle East, where investments in health tech, investments in edutech, investments in fintech, and now in cybersecurity have started creating an entire layer of economy which never really existed. The multipliers today have started adding into the GDP and have started adding into the life cycle of corporations which did not exist, and that brings in surplus availability in the market in terms of opportunity. There's a lot of dollar sitting on the fence. It's not necessarily in developing countries that dollar is scarce. It's the utilization, the resourcefulness, and the channelizing of dollar that necessarily matters, and that's what a VC brings to the table. An ability to convert a dollar into four.
Wow, that's a very good, nicely explained about what kind of strategic kind of role or part does a VC play, and in the context of developing countries. Thank you, Karthik. Nicely explained. Next, I would go with Dr. Moraine.
What can the VCs contribute to an ecosystem to make things better, to make things more affordable? Yeah. It can be health tech, it can be edutech and education, and many more, as Gary mentioned. So, and then what can the founders contribute from the other side? I think it's two views we have to look at. Let me share the view from the VC perspective. I think if I would simplify it to a maximum, there are two categories of investors. Those who have the money,
yeah,
and those who have the money and know how to venture and innovate. And that's two very different animals, because money is no differentiator at all. There's a lot of money sitting looking for investment targets, which is good news for all founders who are turning problems into opportunities. That's a perfect news. It's not a lack of money these days.
Mm-hmm.
It's more, how do you identify the right ones? Those who are also entrepreneurs in their mind, who chip in their money, but also their network, their market access, who also open doors to other portfolio companies, because many times it's so inspiring to see the founders of our portfolio companies come together, exchange ideas, and improve their own value proposition, or even in certain cases, create a new venture together with us. So that's what it is about, I think. And let's talk about more detailed things later in our talk. I want to keep it short today.
Absolutely, sure. Thank you so much. Next, moving on to Gary.
So what was the question, Sunny?
So, Gary, we want to know what kind of strategic role does venture capital or a venture capitalist play in the developing countries? What
I mean,
value do they bring to the table? Yeah.
well, they bring money, they bring expertise, and they bring contacts, right? So,
Mhm.
I mean, those are some of the things that these regions are missing. And we're a venture builder. The venture builders do the same thing. The difference is we take hands-on roles within those companies. So it's it it's really important to be able to open up those markets, because if there's no capital to be able to help them and they can't really integrate globally, what are they? They're a regional play. And many of these companies, they have incredible technology that can go global, but they just don't have the avenue, the vehicle to be able to get it out to the rest of the market. And that's really where the secret sauce is.
Right. Karthik is struggling to get in, but yeah. So, Gary, are you done?
I mean, I can go on for days about it because I've read a lot about this stuff. So I was speaking at the United Nations about this stuff. I mean, this is, but we got to learn as humans that we need to be able to level the playing field and democratize the opportunity. It's not about a privileged few. It's about how we can make this world better. I think over the last couple of years, because of the COVID and now the emerging Delta and Lambda and Iota, we understand that we're frail and that we need to work together to create vaccines to be able to do things to be able to affect our climate. Think about this, Donnie. By 2050, we're going to have to double the food supply. Based on where we're doing production today, it ain't going to happen. We can't double the number of livestock because 26% of the pollution out there today is created by livestock. We got to look at plant-based food. We need to do research. We need to help people to be able to help themselves, to educate them. One of the things that startups do is bring, I saw it myself when we went to Russia. When I went to Russia in 92, and then throughout the 90s, and then moved there in the early 2000s, like 2002, I saw the same situation. So, what happens, people adapt very quickly. So our goal, our job is to be able to give some of the tools. As they start to help themselves, they start to raise their awareness of the rest of the planet. And with that, what happens is it makes us all better. And if we don't do this, we can't solve the challenges. I mean, we talk about pollution, we talk about overpopulation, we talk about not having enough money to be able to feed their family, but it's not about entitlement, giving them money. It's about creating opportunities. From my perspective, right? I see it. We're doing all over Africa, Ghana, Kenya, Zambia, Nigeria, South Africa, Egypt. I mean, there's so many opportunities. And the other thing is, I'm glad other people don't go because it gives us an opportunity to look for the smartest people in the best companies. I love it. Don't go. It's really scary. It's dangerous. You know what I mean? Get your shots.
See you, Gary. See you around.
Yeah. I mean, it's so we can go down through and when you go into those environments, you create opportunities. We also work all over Latin America. There's 647 million people in Latin America, 1.3 billion people in Africa, and of course we have all over Asia. So the situation is, these are opportunities to be able to mine that intellectual capacity to help them. And that's really where we, that's what we do. I mean, we're down there. We're in Argentina, which is one of the top fintech companies, Chile, Brazil, all over Africa, as I said. I mean, literally 24 countries right now.
But Gary, why do we see initial public offerings, IPOs, are limited as an exit strategy in these emerging markets?
They are limited or unlimited?
They are limited as compared to a Silicon Valley, I would say.
Well, I mean, they're not limited if they talk to us, that's for sure. Because, I mean, it's about access, right? Talk to Marin, talk to Karthik. I mean, the situation is we're right here. It's like I've done an IPO on NASDAQ. I've got some things coming up in the near term myself. It's a matter of having those contacts and connections. Look at this. Click Software was a little company from Haifa, Israel. We brought it over to Silicon Valley, to San Jose, California, actually Campbell, California. I was on the original team, changed the name of the company, Click Software. We did an IPO on NASDAQ, right? Eva came out of Russia. Eva came out of a company called Abby, brought the company over to Silicon Valley. It became a U.S. company. I can't talk about the future plans, but it has a bright future, shall we say, right? And so the situation is, you got to set it up. It's like, Harvard created, it's very interesting because Harvard University created the first MBA program in the world, but it was not to treat people how to become entrepreneurs. No, it was to treat people how to become managers. And it's an entirely different skill set. Risk is not something in many corporations, and Marin and Karthik will agree, that's really tolerated. Oh, no, you're too risky. You're a cowboy. You know what I mean? And they start to label the people. So what happens? Everybody starts to fit in because they don't want to take the risk. So the situation, what we need to do is we need to help bring those skill sets of entrepreneurship to those places. And I'll tell you, people come out very, very quickly and start to develop some incredible companies. Look at it. Look at WhatsApp. Look at, WhatsApp. Jan was originally from the Ukraine, came over to the U.S. with an idea. He had in his office in the Evernote building, didn't even have a placard on his door saying it's WhatsApp because he thought he would be out of business and didn't want to spend the money. And he sold it for 15 or 16, no, more than that, $17 billion to Zoom. But, there's hope. We need to find those talented folks. And one of the ways you do it is create a ecosystem. One of the ways you do it is start to, do presentations, do pitching competitions. The same thing that VC TV is doing right now to bring them out of the woodwork. And you're going to find them. They will come. And once they start to come out, it starts to create a movement. I remember in Russia, my first entrepreneurs club, people said Russia at the time was a third world country. And I had my first entrepreneurs club. I had 3 people come. At the very last entrepreneurs club, big entrepreneurs club I had over 2,000 people, and I was on the stage with Guy Kawasaki. Seriously. So, that was within a year. So if it means that, it can be done anywhere. I've seen it, in Kazakhstan, Uzbekistan, Azerbaijan, all over the world, actually, Nigeria right now. But it's a matter of creating. And then once you do that, people start to become more integrated, from my perspective, to the rest of the planet. They start to understand what the rules are, and they want to abide by the rules because they want to help their families and they want to, be successful.
Oh, yeah, totally agree, Gary. These are some of the solutions, to overcome that gap. But I was reading a very recent article which suggested that all the VCs, there was a list of VCs, a list of unicorns, list of, startups that went public, and it was all United States, Israel.
Sure, but the situation is we were an Israeli company that came to the U.S. It's not that, Eva's a company that came out of Russia, but now it's a U.S.-based company. That's the best thing to do. I'm happy that happens, not for the U.S., but I'm happy because what it shows is that those are really smart companies. If you're going to go fishing, you want to go to a lake that's stocked with fish, right? So this is like keep it simple, stupid time. I remember growing up as a kid on the farm in Pennsylvania. My friend and I said, we're going to go fishing. I said, Bill, let's go to the lake that's got the fish. My friend just said the fish truck. They literally have a fish truck, drop fish off. And he said, no, I'm going to go to the other lake. Well, I caught 9 fish, 9 trout. He didn't catch any. He said, how did you do it? I said, it's pretty simple. There are fish in the pond, right? Fish in the lake. So go where the fish are. The point is, what happens is in Silicon Valley, there's a different kind of mentality because of Stanford University, primarily Stanford, but people from all over the world, like Elon Musk, Sergey Brin originally came from Russia. They're from all over the world and they're making a dent in the universe. So it's like 67% of them are immigrants or first generation. And so that mentality really helps to bring the companies out of them. To your point, they say U.S. because they become U.S. company. Why? Because the rule of law. For the most part, the rule of law, And investors are really comfortable, like Marin and Karthik, when the rule of law applies, because they know if they have a problem, they can go to court. Secondly, the access to capital. There's a lot of money there that's really pent up. And there's, I have a meeting with Tim Draper in a few weeks, right? He's a top VC. And having access to people like that, when I go to Starbucks in the morning, I see Tim Cook and I talk to him. Not every time, right? But, and I see Zuckerberg at the Chinese restaurant. It's just, you just have access to people that would, and what do they have? They have ideas. When I did EVA, I saw David Yang walking down the street in Palo Alto in University. He said, "Hey, Gary." I said, "Hey, David." I met him in Russia. He said, "Listen, I'm looking for the CEO and a co-founder of a new company. Do you know anybody?" I waited about a week and then I called him up. We founded EVA, which is a top 10 AI HR tech company today. Really, that's how it works. And so what we got to do is I'm not saying that the U.S. is the end or Silicon Valley. We look at Silicon Valley as a port to the rest of the world, not as the U.S. It's just a place where people from all over the world congregate. Is it changing? Absolutely, because of decentralization and other places that are picking up the steam. But still, it's a center point. It's a focal point today. So those companies are coming over, relabeling themselves as U.S. companies, bringing their management team over. It's a whole lot easier for them to, if you're in a place, I don't want to name any, I shouldn't name any country, but if you're in some country that does not have a good legal system and you're trying to raise money, it's not easy because somebody like Marin or Karthik will not invest in your company because they just don't trust the system. If there's a problem and you invest $10 million, what are you going to do? Nothing, So what happens is you want to look for places where the rule of law. That's why the U.S., from that perspective, they're not. If you look at beneath them, though, you'll see they come from other countries. I would bet 60-70% of them, in my own opinion.
Absolutely. Thank you, Gary, for sharing those insights. Karthik, besides that, I also see some other challenges, like the entrepreneurs have very limited tech knowledge, and the VCs have a lack of financial transparency in these investee companies, and obviously the government policies, the corruption, and the legal system itself are you name it. You've invested in India, Pakistan, and other emerging markets. So how to bypass these hurdles? Really, we talk about, we can bypass these hurdles, but we can't. We know that for sure.
You can't. See, to go back to your previous question, why most of the unicorns and most of the listings are on NASDAQ and NYSE, primarily because of this reason. The market takes almost 3 decades to mature, irrespective of what geography, what size. It is 3 decades of investment that creates a VC sensitive / VC and venture capital conducive market. A geography like India, for that matter, 2003-4, when people started investing in the geography, round tripping of dollars, bringing in money through Cayman Island and BVI, no clear regulations on FIPB to invest dollars into the country, no clear investment directions or licensing directions from the government to have banking regulations in place. Banks were not creating offshore accounts and offshore lending regulations. Dollars could not be repatriated back out of the country to VCs. So VCs found it extremely difficult to even adjust with the banking infrastructure. Once you overcome the banking infrastructure through banking reforms, you suddenly realize that you don't necessarily reach out to people who understand. When, for example, I see almost 6-7 ideas every week coming out from developing geographies, you'll be surprised. Some of them come in as a A4 sheet with a story written, and at the back it says, I want $4 million, $5 million to be invested. And I scratch my head that it takes me at least 200 pages of work documentation before I even decide to think about investing in a company. So teething problems of a geography, when we see a venture capital becomes a fad in a country, but with very poor infrastructure, very poor readiness, is what India was in 2003, or what Pakistan is now, or what Saudi Arabia is now. So it takes that much time. But common challenges that we've seen is primarily around availability of human food.
Karthik looks like there's an opera singer right now.
Yeah, Dr. Marin, go ahead while you joins back.
Which questions do you want me to elaborate?
I think he's joining back. It's about why more, as said, more listings, NASDAQ listings, as opposed to, we don't see like many unicorns out of US, VCs out of US. I saw a list and it was full of United States.
Yeah, if you look at the landscape, an IPO landscape, I'm convinced that Singapore, and I'm not saying that because we are Singapore based, but I'm saying it because we are convinced that Singapore is at a pole position of becoming another Silicon Valley in Asia. Why? And we've heard all of that. It's the secret source of talents. It's you need your governance and compliance. It needs to be easy to do business. That's what we've just heard. Because if it's too complicated, any early stage investments with smaller ticket sizes is just not worth looking into it. And any VC, family office, or CVC, we want to focus on building businesses, helping them to thrive, and not being a problem solver for contracts or if something goes wrong. So your second question has been, and I think that's a very interesting one, how can we help emerging countries to get the things right in respect to governance? I think there are two ways. One way is trade agreements. We're having many trade agreements, and if you want to become part of the club, there are certain advantages to be part of the club. You need to move into the right direction. That's one thing that might help. It'll take some time, and I think the difficult part of that play is that the partners in the trade agreement, they also need to be prepared to kick somebody out if things go to the wrong direction, which happens pretty frequently in emerging countries. There's a change of power somewhere, and things have been going very well, and suddenly, surprise, surprise. So that's the topic. The second topic, I think, it's just setting standards. Maybe some of you have heard about the data protection laws in Europe, the GDPR. It's probably one of the most stringent ones in the world. It's all European countries who set that standard. And it might be that one, it might be a US standard. We just need to take standards and then deploy them to the other countries. And the more we as developed countries align on setting standards and then deploying them, we can also help getting it right. And then we are helping the entrepreneurs because we are stabilizing their groundwork. If not, they might just need to move somewhere. And that's what we see in Southeast Asia. Many entrepreneurs prefer to move, if they can, move to Singapore or move to maybe also Hong Kong previously, or other places in Asia to build their venture there, because they have talent, they have the VCs, the family offices which are there, they have the ecosystem, and they are sure that things will go the correct way. What Singapore needs to do for sure is to work on getting liquidity into the market, to also enable IPOs here in Singapore and Southeast Asia, because that's the missing part. It's pretty simple. It's just there's no market for IPOs really, because there's not enough liquidity, not enough interest. So then you do your IPO somewhere else.
Wow, that's a very interesting point coming, especially if you Singapore, like a lack of liquidity. That's why less IPOs. That's like a straight response to a question or my question. But you're saying that on the flip side, Singapore has the potential to be the Silicon Valley of Asia, right?
Yeah, I'm very convinced because Singapore didn't think about it during the pandemic or only 5 or 10 years ago. It's really a master plan that goes back to the late 1990s when they've been rethinking. And I think what many people ask me, my friends in Europe and all over the world ask me, yeah, how would you describe Singapore? And then we can spend an evening together. And I can also talk a lot about Singapore, the pros and the improvement topics. But I think to explain Singapore in a short sentences, the Singapore mindset is what works today does not work tomorrow. And
Like,
that's a perception. What works today might not work tomorrow. The perception what works today might not work tomorrow. So,
right.
so actually, it's anything else that complacency, it's curiosity, it's entrepreneurship. So Singapore reinvented itself again and again and again and again. And I think this really settled in the character and in the behavior of the community here in Singapore. And anybody who's moving to Singapore is kind of pulled into that way of thinking too. Maybe it's the same in the Silicon Valley, Gary. What do you think?
It's something that today the same, Gary?
Yeah.
Yeah, I missed it because you broke up a little bit, but I mean,
Really? Okay, then I'll start off one more time. Now, how's the audio, Sunny?
Yeah,
no,
I can hear you.
it was. I didn't hear Sunny. Sunny said something. So what's the question? Is it the same in Silicon Valley?
Yeah, because if you, what Dr. Marin was saying, that when it comes to Singapore, it's just the culture that they what works today doesn't work tomorrow for them.
Well, that's
So they
yeah, I mean, and that's the whole idea of customer development, right? You're continually going out and probing your customers to make sure that the product or service you have is something that they really want. So it's really an iterative process. The other thing about Silicon Valley is they're not conservative. And like some cultures around the world, if you fail, it's a bad thing. In Silicon Valley, it's not necessarily bad. It's like people don't get upset saying, oh, well, I failed with 2 companies. The situation is it's a good learning experience because then you learn what not to do. So, and the other thing is, get stuff done. It's not about talking about it. It's about execution. And a lot of times, how many times do people say, oh, I had that idea 10 years ago? Well, okay, then why didn't you do something about it? If you had this great idea. And so it's execution. It's having access to the right kind of folks to be able to get ideas from them. I got to tell you, in my office in Silicon Valley, the brother of the founder of Google's there, right? Robinhood was in my office and started out of my office in Silicon Valley, 68 Willow Road. TikTok, when they came over to the US, were there. I'm a lot of companies. I mean, you can't imagine who I've talked to over there. So what happens is you have access to people you normally wouldn't have access to. What does it do? It just gives you other ideas and other contact networks to be able to help you and help make sure that your ideas are valid, validate them. Most of the time what happens, by the way, is that these companies don't validate their ideas. They come up with them. They said, I need funding, but they never test it with real customers. And so I think in Silicon Valley, it's just because there's a different kind of a mindset, very similar to what Marin said in terms of how the view is in terms of, tomorrow. It's always iterating. And if you don't change, you're dead, right? You're going to become a dinosaur. So the situation is you already continually have to probe and iterate to make sure that you are in line with your customers' expectations. Now, there are exceptions, by the way, because Steve Jobs used to come out with very interesting technology and assume that this is what the companies were going to want or the customers were going to want, and they did. But there are few Steve Jobs out there that can do that kind of they're that good at it. Most of the time people fail. It's better to iterate. And then the situation is you don't waste your money either, right? What happens is you go down the wrong path, you start to build something and nobody wants to buy it. So if you're continually doing customer discovery, you figure that out. And most places don't do it, but you have to do it. I had my billionaire partner, David Yang. He and I would walk down the street in Palo Alto and go to cafes and sit down with people. And you'd be amazed at who we would meet too, by the way. Vice president of Apple, senior executive of Google. And we would sit down and present our ideas. Before we even made them, we would make PowerPoint presentations to see what people thought. And then I would videotape them and send to my engineers because I wanted them to understand what these customers potential customers were saying about the product or service, and it helped immensely, actually. So, but you got to be. You're not that. It's some cultures. They look at a CEO of a company as that they don't get their hands dirty, but you got to get out there and you got to dive in and you got to work with the team and to be able to solve the problem. Because if not, you're not going to be able to figure it out, and there's a high probability of failure.
Yeah, sure. Thank you, Gary. Customer discovery is very important. Karthik, before he left, he just jotted down 2 points. Problems of developing geography is technology, because he couldn't join because of his bandwidth.
Well, that happens all over too, and even in Silicon Valley. Can you imagine the heart of it? I've had in San Jose. I've had my bandwidth go down in the valley, so you never know. But that's again why there's opportunities coming out, like Elon Musk and his new venture to put these satellites up to be able to bring the internet to people all over the world, and it's going to happen, right? And people are going to learn, and we're going to change. It's going to be quite interesting. The view of the future is really bright if we do the right things.
Yeah, I've also known that entrepreneurs, especially in emerging markets, they don't want to give away a big share or sell their big share of their company to VCs, as opposed to what happens.
Well, they don't want to give them to employees either. You know how hard it is to tell somebody from some countries you got to do 15 to 20% of your company should be given to employees. They don't want to do it. They want to hold it themselves. Well, and then the other side of it, you got to look at it. The employees don't understand what the value of the company is, right? So they're like, they don't push to get shares in the company. And, in the Valley, one of the things, and many places around the world, it's, that's how you're going to make your money. I know people that have made $30 million because they got shares in a company early on. And so, one of the things is you want to share the opportunity, because when you do, first of all, you want to hire people that are a lot smarter than you. That's door number one. Because if you hire people smarter than you, the chance your company succeeding is really high. So you never go down through and, you got to create, on one side, you got to lead a company. On the other side, you got to understand you hire smart people. And the reason you hire them is to be able to help you manage the company. And it's not a situation where you want to do it alone. You got to do it as a team, as they say in German, what Gestalt, the sum of the parts equal the whole. And so we need to do that. And the third situation is you got to make sure you treat people fairly and justly. And if you do that, they're going to want to work with you. And if you don't, if something goes sideways in the company, they'll leave. But if you have that kind of relationship built up with them, it's not just about the money. It's about how you can work together and how you can each make the dent, and listen to them too. By the way,
right.
Employees have a lot of information, but sometimes if you push them and don't let them express their feelings, you'll fail.
Great points there to my question, Gary. Thank you so much. Dr. Marin, would you like to share anything else with us?
Well, there's not a lot to add to what Gary outlined previously. That's about it. But what we slowly see is that founders open their minds and are more open for employment share options, to invite their employees, being part of a purpose-driven company. There are still some who prefer to bootstrap their company, especially if they manage to generate sufficient cash flow to do slow growth. But most of them, they're not going to be unicorns, because you have to bring all the ingredients together. I wouldn't, though, want to say that in Southeast Asia, any founder wants to keep the shares more than in other regions all over the world. There are maybe more of those, but it's opening
up. It may be a little personal question, but what made Schweizer family to move to Singapore from Germany?
We started our first business in Singapore in 1982. So we are going to celebrate our 40th anniversary soon. So it's not been a real new move. That was with electronics manufacturing those days. And when we thought about how do we set up the venture capital and venture engine arm, you need to be in the market where there's a lot of music. That's the German thing, but there's a lot of music in the market. So you need to have the macroeconomic drivers. That's a growing population. There needs to be a lot of problems you can solve. You need to have the talents. And now I would start to repeat what we've already heard today. And then it's been the combination of, we knew Singapore since a long time, so we felt comfortable already at home. It's been our second home. We did one IPO in Singapore, at the Singapore Stock Exchange, not in New York. So and also it's the right location to be close enough to the markets we wanted to address. And we also did one investment in Silicon Valley. And that ended up to be a typical hybrid thing, you know? We thought, like, what we can do here, we can replicate it over there. Maybe not. So all the German spectators, Schuster bleibt bei deinen Leisten. So stay there where you know where things are happening. So you also need to have a lot of employees in the end markets to get the right deals on board. Be it Indonesia, Vietnam, or the Philippines.
Thank you. Okay, let's take some great points there, Dr. Marin. Absolutely great points. Let's just take some closing remarks before we wrap up. Gary, where can people find you if they want to reach out to you, and what's your closing thoughts?
Yeah, so this is a great time. Don't be afraid. Move forward. Look where other people don't look. I had a conversation at lunch with a guy that was one of the founders of Sun Microsystem, which was a company that was really big in the 90s and early 2000s, Scott McNeely. And he said, always go to areas where you fear the most, because you're going to learn the most and benefit the most. So check it out. Don't be afraid. There's a democratization of opportunity around the world. Intellectual capacity is evenly spread, but opportunities aren't. Go to those areas because you're going to find a lot of incredible companies. My name is Gary Fowler. You can reach me on LinkedIn or Twitter, or check my Founders Report. Actually, today I have a Founders Report on VCTV with one of my friends from Nigeria, one of the top guys in Nigeria, who's an investor and also in cybersecurity. So check it out. And that's it. Thank you.
Thank you, Gary. Thanks a lot. Dr. Marin, over to you, please.
Beside money, so looking for investors, doing a pitch, that's everybody's day-to-day business. I think what every founder should also think about is actually to getting the right expertise on board. You might get that via your investors, if you choose the right ones, which are venture builders like Gary is, which are venture engines or family businesses like we are, and many more. But you could also think on setting up an advisory board. The advisory board is not a board that is part of a governance board, so the board of directors. They are not going to run the show. They are not going to make decisions. But they might be a great think tank for you on a monthly basis, let's say, to give you input. May it be market, may it be technology, may it be various topics. So you should also be open for that and think about it if that might create value and accelerate the development of your firm. My name is Marin. You can get hold of me via LinkedIn. Please visit our website. We have a Venture Engine page where you can also share your pitch with us. And we are happy to get in touch with you then.
We can't hear you, Sonny. You're on mute.
Oh, I'm so sorry. Thank you so much, Gary and Dr. Marin, for your insights today, and Karthik, who unfortunately couldn't join us because of challenges of coming from an emerging market. But we had great time on the show, and yes, I'll be back again with another episode with another set of speakers on VCTV. Till then, take care of yourself, and I'm going to see you soon. Thank you.
Bye-bye. Thank you. Bye-bye, Marin. Bye-bye.